What up? It's Haley. Hey guys, as I told you in my last video, I am now a loan originator in Seattle. I work for a company called Residential First Mortgage and Capital. They've been in the business for 30 years, and with that comes 30 years of experience. To obtain a mortgage is a process, especially for a first-time home buyer who's never gone through it before. But there are a ton of options that you can choose from, and we specialize in creatively finding you the financing that fits your current situation best. In this video, I'm gonna go through the mortgage process with you on a conventional loan so you can better understand the basics of what's gonna be asked of you as the borrower. A conventional loan is the most common type of loan a consumer would apply for. There are also FHA loans and VA loans, but those are for more lower down payment options. A conventional loan is a paper, meaning it's for consumers that have good credit, income, and liquidity. This type of loan earns the consumer the most competitive rates out there. The first step in the mortgage process is to get pre-qualified. Pre-qualification determines what you can and cannot afford as far as the size of the loan, your monthly payments, what you are comfortable spending each month. This is the very first conversation you have with your loan originator, aka me. We can do this over the phone. It typically takes about 5 to 10 minutes. And by the way, I work on your schedule, so whenever it works for you. Okay, back to the mortgage process. The four main areas of qualifying include income, credit, liquidity, aka assets, and size of your down payment. Essentially what we do is we ask you questions about these four categories, and then we determine what kind of loan you can qualify for. To get the ball rolling, we're gonna ask you a series of questions. Where is the property located? What type of property are we dealing with? Is it a house, a condo, multi-unit? What is the purpose of the loan? For example, is it a loan to buy a primary residence, or is it a loan to buy a rental property, or perhaps a loan to refinance one of those types of properties? Next, we will go through the four areas of pre-qualification. The first one, income. We will ask you about your income, how much you make each year, are you on commission or salary, are you also earning overtime and bonuses? We will ask you if you're self-employed or if you work for a company, anything that can help us determine the durability and longevity of your income. Eventually, we'll look at your pay stubs, W-2s, and tax returns when we dig deeper into the pre-approval stage. The best situation for you to be in is to have had 2 years of experience under the same company, at the same place. Essentially, we need a 2-year history of your income. However, if you are straight out of school or just switched companies, all we really need to qualify you is 1 to 2 pay stubs from your current employer. Next is credit. We will ask you about your credit score just off the top of your head, but we will have to run a credit check to complete the pre-qualification process. We will look at your payment history on things like your credit cards, student loans, car loans, and the balances and payments on these loans. All monthly payments on these forms of consumer debt factor into total debt ratio calculation when we're determining what type of loan you can qualify for. Then we're gonna ask you about your assets. Anything that can help you qualify to own a home, such as bank balances, stock portfolios, as well as any retirement savings you have accumulated over time. If needed, we will discuss the possibility of a gift from direct relatives to supplement your savings as well. We will be looking to see if you have enough in liquid assets to fund your down payment, closing costs, with enough left over for the lender's cash reserve requirements. That's a lot of mumbo jumbo. In other words, they want to see that you have decent reserves in your account to cover the first 2 to 3 payments after you close. They want to be able to see this cushion in your account. Last is the size of your down payment. This is pretty much whatever you prefer to put down. We will talk about the pros and cons of each down payment option. What are you comfortable putting down? What are the tax advantages you can use to offset your mortgage payment? Pre-qualification is an important first step before you start looking for your home. This will help you narrow down your choices and allow you to know exactly what you can afford. We highly recommend doing this first so you don't waste your time in your home search. At this point, we can draft you a letter of pre-qualification. Typically, borrowers do the pre-qualification process, but if you run into a realtor that needs a pre-approval, we can also do that for you. It's just a little bit of a different process, and I will go over that in another video. The pre-approval process typically takes a couple of weeks. The pre-qualification process, as I've explained to you, is a couple minutes over the phone. Just a heads up, this is free. We do not charge for a pre-qualification or a pre-approval. Yes, it's absolutely free to figure out what you can qualify for. As I stated at the beginning, Residential First Mortgage and Capital has been in the business for over 30 years. We've seen it all. Please come to us with any questions you may have. We are happy to help you and guide you through the process. The link to our website is down below. So, what are you waiting for? Reach out to me today.